In a previous video, we explored how robotaxis could reshape transportation. But now comes the much bigger question. Can Tesla actually make it work? Because if Tesla succeeds, the company could evolve far beyond electric vehicles. But if it fails, many of the assumptions investors have made about Tesla's future may need to be reconsidered. And this is where the story gets interesting. Very few companies divide investors as much as Tesla does. Some believe Tesla is building the world's most valuable AI and transportation platform. Others believe expectations have moved far ahead of reality. I have followed Tesla for years, and one thing I have learned in this that Tesla's reality is usually more nuanced than either the bull or the bear suggest. So in this video, we will break down Tesla's robot taxi strategy, its biggest advantage, the major risk, and the single most important question investors should monitor over the next decade. Section 1. What is Tesla's robotaxi strategy? At first glance, Tesla's robotaxi strategy sounds surprisingly simple. Build millions of vehicles equipped with cameras, software, and AI. Then gradually enable those vehicles to drive autonomously. Think about it this way. Traditional ride hailing companies like Uber own the platform but typically don't own the vehicle. Traditional automakers sell vehicles but usually don't operate transport network. Tesla wants to potentially do both, and that's where things get interesting. Tesla believes that autonomy can turn a vehicle from a depreciating asset into an income generating asset. Whether this vision becomes reality remains uncertain, but the ambition itself is enormous. Now here's the interesting part. Unlike many competitors that rely heavily on expensive sensors such as Lidar, Tesla has primarily pursued a camera based approach. In simple words, Tesla is attempting to teach cars to drive largely using vision. Similar to how humans drive, supporters argue that if humans can drive with eyes and a brain, AI can eventually do the same using cameras and neural networks. But not everyone agrees with Tesla first camera first strategy. Critics argue that additional sensors improve redundancy and safety, and that's a key distinction. The debate isn't simply about autonomous driving, it's about how autonomy should be achieved. A common retail investor mistake is assuming that technology leadership today guarantees leadership tomorrow. History rarely works like that. But here's the thing. Even if Tesla has excellent technology, autonomous driving is ultimately a data problem. And Tesla may already possess one significant advantage. Tesla's biggest advantage, that is data. See, artificial intelligence improves through training, and training requires data. I mean, really lots of data. Tesla vehicles operating around the world continuously generating driving information. This real world data can potentially help improve AI models over time. Think about how ChatGPT became useful. It learned from enormous amount of information. Autonomous system also improve through exposure to countless real world scenarios. A child running into the road, unexpected construction zone, unusual weather condition, complex intersections. Real world driving is messy. Stimulation helps, but reality remains the ultimate test. Now, this sounds simple, but the implications are much bigger. If autonomous driving becomes primarily an AI challenge, then data scale could matter significantly. However, investors sometimes make the mistake of looking only at quantity, but quality does matter. Collecting millions of data is useful only if that data improves safety and decision making. And that's where the story takes a interesting turn. Because data alone doesn't guarantee success, but execution does. Here's the challenge. Technology may be Tesla's strength, but regulations may be its biggest obstacle. Section 3, the biggest risk. Transportation is heavily regulated. Government cannot afford large-scale safety failures. Even a few highly publicized accidents could slow adoption significantly, and public perception matters a lot. Think back to the early days of commercial aviation. People were initially skeptical about flying, trust developed gradually. Robotaxis may face a similar journey. Because if you have seen the robotaxi of Tesla, there is no steering wheel, which is why the passengers could get nervous. Now, you might be wondering, If autonomous system can consistently outperform human drivers on safety, adoption could accelerate rapidly, which can be true, but however, it's just a possibility. But timing remains uncertain and data not confirmed. See, no one knows exactly when fully autonomous transportation will achieve widespread adoption all across the region. Road infrastructure differs, regulation differs, driving behavior also differs. This is why investors should be careful about assuming straight line growth. Technological revolutions often progress in waves. Periods of excitement are frequently followed by periods of disappointment. One thing experience has taught me is technological change rarely happens in a straight line. There are periods when progress seems disappointing, but once the ecosystem matures, adoption can accelerate faster than most people could expect. But that's only half the story because Tesla isn't simply building autonomous software. It may be attempting to create an entire new business model. Now let us see the bull and the bear case. Here's the interesting part. The market appears to be pricing in a future where the Tesla eventually solves autonomy at a scale. But is that expectation realistic? Let's start with the bull case. Supporters argue that Tesla already possesses several important advantages: a large installed vehicle base, massive real world driving data, vertical integration across hardware, software, AI, and manufacturing. If autonomy works, Tesla could potentially transform millions of vehicles into income generating assets and create an entire new transportation platform. However, there's a risk. The bear case is equally important. Fully autonomous driving remains one of the most difficult engineering challenge ever attempted. Competitors such as Waymo are pushing different approaches. Regulatory approvals remain uncertain, and even if the technology works, public trust still needs to be earned. So, the key question investors need to ask is not whether the Tesla can demonstrate autonomy in controlled environment. It's whether Tesla can safely deploy autonomy at massive scale across diverse real world conditions. And that's a very different challenge. Now let us see if Tesla succeeds, what changes? Let's put this into a perspective. Today, many investors still primarily view Tesla as an electric vehicle company, but successful robotaxis could potentially expand Tesla into several industries simultaneously. For example, transportation, artificial intelligence, software, energy, fleet management, and that's where many people debate on Tesla's future. Different investors are valuing different future. Some see Tesla mainly as an automaker. Others see it as an AI and platform company. Neither view is guaranteed to be correct because at the end of the day, future outcomes remain uncertain. As an investor, the goal is not to predict the exact future. The goal is to identify the assumption embedded within today's expectations and simply ask this question: what needs to happen to those expectations to become reality? Because investing is ultimately a game of assumption and probabilities. So, three takeaways of this video. First, Tesla Robotaxi ambitions extend far beyond selling electric vehicles. Second, data and AI may prove to be important competitive advantage, but technology alone is not enough. And third, safety, regulation, and public trust will likely determine how quickly adoption occurs. And a final thought: when investors debate Tesla, they are often debating different versions of the future itself. The real question is not whether robotaxi will exist. The question is who will earn economic value when they do. And that's the distinction may ultimately determine who creates value and who merely captures the attention. The key question investors need to monitor over the next decade is simple. Can Tesla consistently deliver autonomous transportation that is safer, cheaper, and more convenient than human driven alternatives? Because if the answer eventually becomes yes, the implications could extend far beyond transportation. Of course, this could change if technological progress slows, regulation becomes restrictive, or consumer adoption takes longer than expected. And history tells us that technological revolution rarely unfold in a straight line. But when all is said and done, understanding the assumptions embedded within today's expectations often matter more than predicting the exact outcome. So let me know in the comments, do you think Tesla camera only approach can work or will additional sensors always be necessary? And if you missed part one of this series, watch our Robotaxi explained video first so that you can get a deeper perspective of the industry. Thank you for watching and see you in the next one.